Hi guys, I'm Miracle from Matches Trading Professionals. I would continue in the series that has to do with the intermediate class. So we have talked about how to download the meta quotes, or rather the MetaTrader 5 from meta quotes, and we've talked about how to find direction using the moving average. We also looked at candlestick in that class, the bullish candle and the bearish candle precisely. So that was just the basic thing. Okay, so in this class we'll still talk about one more indicator, how to find direction with that indicator, and that's going to be a MACD indicator. Just very simple. Okay, we're not doing anything difficult. I've always told people first is complex, so I do not believe anymore on approaching the market through complex methods. I've tried the complex, I've tried the simple, and I can assure you, if you know what you are doing, both of them will make you rich. So if complexity would bring money and simplicity will bring money, why making it complex? So of course, if you still want it complex, we're going to give you the complex stuff and you learn. So quick one. Let me take this out from the chart. Remove. So this is Euro USD. Of course, you can apply any indicator on any chart. I said last time that first thing you do when you engage on the chart is to find the direction of the market, and you're going to do that through the price action, which has to do with support, resistance, with the swings of the market. We are not doing that yet. Maybe in our next video we'll do that, but in current video, today's video, what we are treating is finding direction using the moving average. Now each of these things can also give us entry, but right now we just want to stick on direction only. Okay, in last class we took entries, but we didn't look for entry, like we didn't apply any method to take entry. We just took entry where we made the market, which is not the right way to trade. I hope I said that and you got that clear that day. So but we just want to practice. Mostly I'm looking at someone who is just a beginner and is trying to get into the intermediate, so we don't want to make it complex. So MACD is an oscillator, meaning that it trades within two values, or it comes to a point. So in the case of MACD, it comes to a point, which is the 0 point. Oscillators are indicators that trades within a central line or trade within two values. Either it trades within a central line or it trades within two values, like the moving the relative strength index. It trades between two values, the 0 and the 100, which normally we put 30, 70 or 20, 80. Now the MACD indicator, let me get it up. The MACD indicator trades between two values, which is the 0. Look at it. Okay, yeah, I would have it there. So this is the default. Of course, we're going to use the default. I love using yellow and green. Of course, you can use the I would have even left the default. Let me reset. Let's use the default color. Okay, so look at it. So it trades within the 0 value. So let me just put it so you see it. Property. So you right click on it, point it as it shows the name, right click and click on property, and then go to level. Let me just add the level 0. Of course, you can do without this, please don't get confused. I just want to show you. Have you seen it? So it trades within the 0 line. It trades and it comes to the 0 lines and all that. We have lots of indicators, guys, and they all do one or two things in the market. You don't need to learn all of them. If anyone is telling you need to learn all, it's a big lie. Just one of them can make you rich. It's just for you to understand how they work. As a matter of fact, some of these indicators do almost the same thing in their way. When this one is giving you signal, the other one is giving you signal, but just that some persons don't know. By the grace of God, we've been able to use most of these indicators, most of them, and we already know their differences and all that. So imagine someone doing achieving one result, but it's using 4 different indicators. That's stress. But if it's working for you, it's good. You can go ahead with it. All right, so a quick one. The MACD oscillator, how does it work? So the simple thing we're going to do with this MACD is that, so these are the histograms. Now there are two ways to trace the MACD: the signal line crossover and the zero line crossover. But I would, for now, for this particular class, we're going to work on the histogram. That's the zero line crossover. Let me get my markers. So I would, now when I mean zero line crossover, I mean when the histogram moves above, gets positive. Of course, if you look at this number, once you see positive, once you see this number positive, it's currently positive, so you can buy. Okay, now the thing is that this point is buy. Once the histogram is down, is sell. Okay, this red line is the moving average, you know, is the moving average of the fast. I really don't want to talk about this MACD, but now we have two EMAs that are calculated to give us this histogram prices. You know, the difference between two EMAs gives us this histogram. Why the signal line, that is this red one, is the moving average. You know, is the average of that, you know, of the histogram price, is the average of the histogram price. So I don't know, but I just hope you don't get confused. That's why I said I don't really want to go into the calculations. If you look at it, 1226, so the exponential moving average of 1226 is what gives us this histogram. You know, then the simple moving average of what we get. So this MACD kind of helps to filter out the variations, volatilities in the market, and helps to define the trend. So by the time, and of course it's a lagging indicator, so by the time it comes up to give you the trend, most times is accurate. So it gives the trend, and when we talk about getting direction, we're talking about the trend. So very simple. I'm just going into all these many things because of some persons that will be like, you didn't say something. So that's just why I'm saying this. But in the real sense, it's very simple. How are you going to engage on the MACD? Just look at the histogram. Where is the histogram? It's above this line, buy. The histogram is below sell. So this is the W chart. Let's look at this. Interesting. Now I told you something. Look at. Can you see? We said, remember when we started this class, I said stick to the W chart, the D1 rather, or the H4 for everything. So for now, not like the W doesn't work or H1 doesn't work, but let's just. So can you see it's coming down already? And look here, it's negative. The moving average, which is this red one, is still positive. That's this. You can see it's still positive. Okay. So when it closes like this, it kind of gives us, of course, this kind of a quick entry. It kind of gives us this idea. Look at when it happened here, when it moved up. What happened? This market kept buying to this point. And of course, it stayed here. So it bought all this while. So it's kind of coming down. So if it confirms and it comes down, then it's going to sell. We're going to kind of expect sell, or whatever. Okay, so is that simple? That's simple. Just take it in this simple way, in this easy way. Of course, as time goes on, we're going to look at it further. Let me show you. Can you see when it crossed down here? It kept selling. And of course, remember I said we have two types of crossover. Let me type this. So MACD means moving average convergence divergence. So buy when price is above the zero line. Zero line. So when price is below the zero line, it's as simple as that. This is just a simple rule. Everything I've been saying is just it's trash. So it doesn't matter whether you understand anything I said or you didn't understand. This is just a simple thing. You have the zero line. You have the zero line there. When price is above it, buy. You have the zero line. When price is below it, sell. Did I say price? Not price. Not price. When the histogram. When the histogram is below the zero line, sell. All right. So that's it on the MACD. Okay, so of course direction using the MACD, we are not treating entry here. We are going to start talking about entry. So but if you understand direction, it will help you on entry. Now I kind of became better when I started staying on the direction of the market. There are some markets I'll be like, I'm not going to buy it. Of course, like this Euro USD, I've been on it. Of course, one of our signal group, what I dropped on Euro USD, GBP USD for the week was sell. I don't know if I told them about gold, but I know all I did on gold this week was sell as well. So about 3 positions I gave them, either Aussie or Kiwi, that was talking about the New Zealand dollar, was also sell. And look at it, the market sold very well this week. Sold very, very well this week. Imagine this, selling from this point. Okay, so let's put in MACD here and see what happened this week. So understanding this thing makes trading easy. You don't need to stress yourself. Stop doing lots of things. Are those things important? Yes. But if they are working, stick to it. But if you are still struggling with them, start from the basics, start from the simple stuff. Look at this week. It was saying sell. And if you are sold, you make money. How many pips is that? How many pips? That's 150 pips. As at on Tuesday, we had already made over 300 pips. So I'm done for the week. Of course, you don't need to trade all the time. Just know the times to trade on. That's that. Okay, that's it for now on MACD. So buy when price here. Okay, let me just look at another asset. Let me look at this and bring it up. Is it going to fail? Yes, there are times the signals will fail. That's why later on we're going to learn about entries. We're going to learn about entries and exits. So let's just keep trading simple. Let's keep trading simple. I don't trade all pairs like this pair. I don't trade it at all. I don't like it. Seriously, I don't even like what it's doing, so I leave it. So look at MACD has been down here since. What's there? Okay, I thought as much. Okay, so it was actually supposed to be fine. Okay, so did you see this week? This pointed buy. The week started here. So MACD was on buy. So who bought made 139 pips. From here, the MACD was on buy, and see how it bought. Stop stressing yourself. Look from here, the MACD was on sell. See how it sold. Stop stressing yourself, guys. Now, I didn't talk about the signal line like these crossovers. I only talked about the zero crossover. Just focus on one thing and stay on it. Take your eyes off the other stuff. If you're talking about this crossover, you would have lost money. Look at when you do this crossover, but this will confirm. This kind of gives you an early prompting. It gives an early prompt. This crossover, mostly this first one gives an early prompt, then divergences, it got set and it crossed. This confirms the trend. So by the time it crosses over zero, it confirms the trend. Are we going to have fake crossovers? Yes, we'll have fake outs. So when you have fake outs, of course, if you had entered, you could lose. But then you're going to make more money if you stick to the trend. Remember, trend is your friend. That's why I'm saying this. Trend is your friend, so always trade with the trend. If you got value and this is your first time of coming across our videos, kindly subscribe to our channel, like this video, share it also with your friends so that they will be part of this free session. Thank you guys. Enjoy the rest of the day.